Hello and welcome to this June 17th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're going to take a look at the Semiconductor Index. On stock charts, it's the $ SOX. The SOX, if you go back and take a look, all the way through April, it was leading the market to the upside. But when the SOX broke down, along with some of the other key sectors, then it brought the overall market down. The SOX went from 405 the last week of April all the way down to almost 325 just after the first week of May. So in about a 2-week period, we saw about 20% of the semiconductor index chopped off. Now, on the reaction high after the initial selling, you can see that the reaction high came right back up to about the 376 level, and that's where we broke down from in early May. We had come down on a couple of occasions late April. We put in a low at 376. We bounced, and then on the big selling at in early May, we took out that 376 support area, continued falling all the way down to 325, 326, somewhere in that neighborhood, and then subsequently we returned all the way back up to 376. We failed and then went back down on a couple of occasions back below 330, getting close to that earlier support level. Now, over the last 6 or 7 trading days, you can see that the semiconductors have risen from under 330 all the way back to the 376 level. On Wednesday, hitting a intraday high of 375.74. You can see this is a very key short-term resistance area. The moving average convergence divergence, or MACD, is very stretched up near 7.5. You can see both of these major bottoms that we saw, one in early May, one in early June, both came with the MACD stretched down at minus 7.5, maybe even minus 8 in early May, and then about minus 6.5 to minus 7 just about a week and a half ago. Now we're on the flip side of that. We've actually been rolling for a while now to the upside, and as we hit resistance, we're doing so with a very stretched MACD up near 7.5. So it looks as though this is an area where the semiconductors could pull back. RSI very overbought on this 60-minute chart, up near 70, and stochastics right now at 95. So on the short-term chart, we're showing very overbought conditions as well. So will this trading range continue? Eventually we'll break out of it one direction or the other, but we are up against very key, critical short-term resistance, and this is actually not a bad area. We only talk about using juiced ETFs in just in specific circumstances. We don't like to just trade juiced ETFs every day. You either want to get a juiced ETF on the long side as you're making a breakout, or when you come back and hit a key support level, similar to what we did back in just after the first week of June. We came back to this 326, 327 level. This is the time, if you're going to take a shot with a juiced ETF on the long side, this is where you want to do it, down here. Now, if you're looking at a possible short candidate and you're looking at a juiced short then on the semiconductor index, I think the ticker symbol is SSG. This is the ProShares Ultra Short of the semiconductor group. This is not a bad area to take a shot. If it breaks above 376, you have to determine where you want to set a stop. But you probably, if it goes more than 1 or 2% above this 376 area, I'd certainly get out of the SSG. So that means you might look at maybe a loss of maybe 2 to 4% if you're wrong. If you're right and it starts migrating back down toward the lower end of this range again, obviously there's a nice profit opportunity on the SSG. But the juiced ETFs are not for everyone. Make sure you understand them before you trade. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.